But it's not armies mobilizing that threaten to bring everything crashing down. It's banks. Financial institutions across Europe are hemorrhaging, stock exchanges are freezing, gold is vanishing from vaults. The entire global banking system is hours from implosion. Then, on August 4th, Britain declares war on Germany, not because it was fixed, but because it was buried. What if I told you this wasn't an accident? What if this was the start of a pattern one that is repeated again and again for over a century? A pattern where wars don't cause financial collapse. This is the story they never taught you in school. Global banking crises have been solved through military conflict. How wars provide the perfect cover to print unlimited money and transfer private losses onto the public. And right now, as you watch this, the same pattern is forming again. The banks are faltering, tensions are rising, and the gears of war are quietly turning. You'll see the financial machinery behind modern conflict and understand what may be coming next. Europe's financial system wasn't just unstable, it was mathematically broken. For decades, banks had expanded recklessly. But the gold backing them, the very foundation of the system, only increased by 80%. By July, the London Stock Exchange had frozen completely. Across 50 countries, bank runs spread like wildfire. Morgan, the Bank of England, all saw the collapse coming. The gold standard meant banks couldn't just print their way out of trouble. What happened next was nothing short of financial alchemy. Overnight, governments suspended the gold standard. They authorized limitless money printing. The very rules that were strangling the banks were erased under the justification of wartime emergency. But the real magic was in the swap. Banks were sitting on billions in bad debt, failed railroads, colonial projects, bankrupt corporations. Governments needed money for the war effort. Banks would provide immediate cash, and in return, governments gave them war bonds. Failing Ottoman loans became German war debt. South American losses turned into British imperial financing. Private risk was laundered onto public balance sheets. The banks didn't just survive, they thrived. By 1918, the number of major British banks had collapsed from 38 to just 5. The crisis that should have destroyed them instead made them giants. The Federal Reserve, America's central bank, was established in 1913 and became operational in August 1914. Just as European banks needed American money to fund the war. 25 years later, it happened again. By 1939, the Great Depression had never really ended. Banks were stuffed with worthless assets, Depression-era loans, defaulted sovereign debt from Germany, Italy, and Japan. If these nations defaulted, and they were about to, every major bank in New York. Then, on September 1st, Germany invaded Poland. And once again, the financial emergency evaporated. Banks swapped their toxic Depression-era debt for government war bonds. Worthless German and Japanese obligations were rebranded as enemy debt to be settled after the war. Fiver, and once again, the banks emerged stronger. Morgan's assets more than doubled during the war. Bankers and officials met at Bretton Woods in 1944 to design the next global financial system. They weren't planning for peace, they were securing their dominance. By the 1960s, the Bretton Woods system was cracking. The US had promised to back every dollar with gold, but it was printing far more dollars than it could ever hope to redeem. Suddenly, the government had a reason to print endlessly wartime spending. Inflation soared, reducing the real value of those gold demands. The crisis was delayed just long enough for banks to reposition. When Nixon finally ended the gold standard in 1971, the banks were ready. They had already laid the groundwork for the next system, the petrodollar. Under this arrangement, oil would be sold only in US dollars. Every nation needed dollars to buy energy, propping up the currency's value. But whenever that system was threatened, war followed. When Saddam Hussein explored selling Iraqi oil in euros instead of dollars in 2000, Iraq's oil sales were swiftly returned to dollars. When Libya's Gaddafi proposed a gold-backed currency to trade African oil, NATO intervention followed. U.S. banks are choking on $227 trillion in commercial real estate debt. Silicon Valley Bank, Signature Bank, First Republic, they've already fallen. Much of it borrowed at low rates that can't be refinanced today. Internationally, the dollar system is under assault. BRICS nations are trading in local currencies, stockpiling gold, building alternative financial networks. Saudi Arabia is flirting with selling oil in Chinese yuan. If that happens, the petrodollar system and the banks that depend on it could collapse. War in Ukraine, rising tensions around Taiwan, escalating conflict in the Middle East. The pattern is falling into place. Banking crisis, geopolitical tension, then war. And what's coming looks exactly like 1914, 1939, and 2003. And unless we recognize the pattern, it will happen again.